Hey everyone, it's Daniel here from InfoVest. Hope you're all doing well. Let's talk about non-farm payrolls on Friday, which was basically kind of brushed off with the whole regional bank issue with Silicon Valley Bank and so on. So, non-farm payrolls, let's not forget about the data. Very important to continue to monitor it. So, non-farm payrolls came in higher than expected. The headline number showing better jobs. However, the unemployment rate ticked up, the average hourly earnings came down. So it kind of painted a good picture for the stock market and for the bond market initially, because you have a little bit higher jobs on the employment. However, the unemployment rate kind of ticked up, so kind of reaching to not reaching to the Fed's goal, but it is what the Fed's been talking about, that he wants to see this number kind of slightly tick up in order to bring inflation down. But the most important thing is that also the average hourly earnings, which tracks the inflation metric, tick down, which basically suggests that hey, inflation is starting to show softening results. Now, with this softening result, this is what caused the stock market to initially rally, and bond markets were rallying basically all day. Now, then afterwards, bond markets continued to rally, but the stock market sold off because of this whole regional bank issue, Silicon Valley Bank, and so on, that created a lot of fears in the markets. Now, this data point is not bad, because if you go back to Powell's testimony, he did mention that there could be faster rate hikes. And the faster rate hikes could come if data suggests that they should do so, if data continues to be hotter than expected. Now, the data was not that hot, it was not that bad. And if you look at the probabilities of interest rates, right, probabilities of interest rate, you see that the 50 basis point rate hike, there was a probability before this data that the markets were pricing in about a 70% chance that this was going to happen. That has dropped below 50% now. So this is going to be very volatile, and it's going to flip also, especially when we get CPI data. And that's going to be the nail in the coffin that's going to determine whether the Fed in a week or so is going to do a 50 basis point rate hike or not. And if CPI comes in weaker, then probably most likely not. And if CPI comes in really, really hot, then sure, you can see the 50 basis point rate hike be a high probability chance for the Fed to do on March 22nd, right? So we did also hear from Biden talk about that he said the inflation numbers are looking good. So that kind of hinted that, hey, the data might actually be weak. And he did say we still need to get the number down lower. But that might hint towards that, hey, the data might be soft. So if it is soft, the question is how soft. And if it's really soft, then sure, you can get a 25 basis point rate hike, and then we'll hear, most importantly, it's going to be really important to hear during that time what the Fed thinks in terms of rates going forward, and the comments he made about faster rates. So are we going to get that faster rates, right? Before, in December last year, you said no faster rates, right? Going from, they were doing in 2022 50 basis points, 75, getting aggressive, and then they said in December that, hey, we're going to stop this and just stick to 25 basis points. But then what happened after 3 months? He changed again, right? Powell changed again. He said, okay, we're going to do, we could, he just left the door open. We could do 50 basis points or more. And he said that by saying faster rate increases if the data tells us, right? So it'll be very interesting to see how CPI comes out. It'll be very interesting to see also what the Fed has to say with those comments, flip-flopping, and also with the new risk of these regional banks imploding, these regional banks having a problem. So it'll be very interesting to see what comes out of that. And I think the markets are probably going to see what CPI comes out at, and then also wait for what the Fed has to say and what their projections are going down the road. Because remember, in this meeting, you also get the economic projections, and there's going to be an adjustment to where they see the terminal rate. So most likely it's going to be higher, because that's what Powell said. So we're probably going to see a higher terminal rate, and we'll see also the other growth metrics in that projection. So it'll be very interesting to see. So let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.